What's up, everybody? Michael Silva here. You're watching episode 9 of the Weekly Scan. The Weekly Scan. This series is all about finding opportunities in the stock market for the week ahead. In today's episode, we will be covering 10 different stocks. It's longer than usual, so buckle in, get out your notepad, because there is some amazing potential and great opportunities going on right now in the stock market. Now, as a quick disclaimer, these videos are for educational and entertainment purposes only. I am by no means recommending any of these stocks for you, to you, in any way, shape possible. I am by no means a professional investor, so do not act or treat me as such. With all that said, let's go ahead and hop into today's episode of the Weekly Scan. What's up, everybody? We're in the computer going over 10 charts. We're gonna move quick, we're gonna move fast. What I'm looking for is support, resistance, and I'll give you an idea if I'm gonna be shorting it or going long. These aren't recommendations. Once again, this is just some technical analysis for your education. They are my opinions only, and probably many other traders too. So let's go ahead and hop into the first chart. We are looking at ticker symbol STNG. Kind of sounds like SNG again. SNG, more than carpets. Okay, what do we have going on? Well, other than just a lot of bearish looking stuff, I want to go ahead and draw out the resistance / support area. It looks like it's going to be at the $21, and let me tell you why. Boom. Okay. It acted as support over here, almost, right? And then finally broke through, tried to come back up and retest it, tried again over here, came back down, tried to retest it, came back down, formed a nice hammer candle, reversal candle, right? We talk about those, and then boom, moves up to the 200-day period average, and then boom, gets rejected. Now, you might be thinking, well, once resistance is broken, it then becomes support, so we might see a bounce to the upside. However, this price action right there leads me to believe that's not going to be the case. It not only doesn't have, a candle that formed like this, it is the opposite. So it looks like there's still a lot of downwards pressure. When we look at the indicators like the MACD, it looks like it's about to cross over. Not quite at the 0 marker yet, but it does look like it's headed that direction. Now it closed below the support, so it is now considered resistance. So me personally, how I would trade this is I would look at this as a shorting opportunity. I would potentially start scaling into the position right around this area and have a tight stop loss. Now, take a look at the previous candles, okay? This right here was the high of that candle. And then you have a lower high, and then you have a lower high. So I think that you can potentially, like we might see on Monday market open, we might see the next candle come up that high again. So you want to give it some room to breathe. I would say this $23 area would be a good area for a stop loss. Now, you don't want to go 23 even. You'd want to be just above that. You want to hide behind those big round numbers. So yeah, like if you start scaling in underneath here and then maybe, or if you want to be, wait for a better entry, maybe up in the $22 range. This is all, kind of your risk tolerance. Like, do you want to have more risk? Do you want to have less risk? It really depends on you. But I think that just by looking at this chart, it's going lower. Looking as far as a target goes, yeah, this 50-day period moving average looks like it holds some weight. So I would say definitely have a target right above that. And then after that, holy moly, it just really takes a nosedive down. So if we can break that, I would say this would be another area for a target, that $15 range. It's kind of like that whole no man's land sort of right throughout here. So yeah, looks really bearish to me. That's STNG. That's all I got for you on this one. Let's go ahead and move to the next. All right, here is ticker symbol MRNA. Now, if you watched the weekly scan last week, I had this as far as going a long position. I drew it out like this, then I had this bull flag, and then it kind of like this. Kind of like that was the bull flag, and I said, hey, it might be breaking up. Well, it's really difficult to say at this point. It is looking, quite honestly, a little bearish, but also, still has the potential to squeeze up to the upside. So this is looking pretty good for both the bears and the bulls. Depends on where the price action really goes. If we see it a break above this $50, nice big round number, we might see that break up to the upside. Keep in mind the volume kind of picked up a little bit, and we have the negative divergent, or we have, not the negative divergent, sorry. We have the crossover in the MACD taking place. It is still above 0, so, take note of it. you know, it's losing its kind of momentum there, and it's crossing over, but it's not below zero to really show us that it's in bear market territory, or sorry, like a bearish river. So I just wanted to bring this one up here because if you did play this on the upside and you're still in it, awesome. If not, just keep in mind, like, keep a tight stop loss still right down in this range. And if you're going short, have a stop loss above this, above the flag, the upper part of that channel there. So that's MRNA. It's still kind of within that consolidation period. We might see a break to the upside, but this is kind of like, I would play it as you got to kind of wait to see where it tries to go. So I wouldn't hop into it until we get confirmation. That's all I have for you on MRNA. Let's go ahead and move to the next chart. All right, we are looking now at ticker GLD. This is the gold ETF, the spider index, spider of gold shares on the New York Stock Exchange. All I really wanted to point out here is this channel that it's kind of been in. So as you can see, this bottom part of the channel acted as resistance, and then it came back down and then finally broke through and now has been consolidating within this channel. And as you see, it came up, got rejected, went down, got rejected or bounced, got rejected, and then came back down, and now it looks like it's moving back up towards the top part of that channel. Now, all I really wanted to do here is, because gold has been gaining a lot of attention, especially on mainstream news and with what the Federal Reserve is doing, me personally, I think that there's still a pullback to happen. Hopefully, because I do want some sort of a pullback in order to start scaling into this position more. But I really think that if you're a long-term investor in GLD, you're going to win either way if you're long. And the reason why I think that is just simply because of the fundamentals that are taking place. Now, if I go back into when the S&P 500 really took that nosedive, gold went down with the price. So when the stock market goes down, sometimes it can drag down this kind of an asset with it. So if you watch my previous videos on my S&P 500 technical analysis updates, it does look bearish to me, which in return makes me think that, hey, we might be able to see a little bit more of a pullback, which would be really nice because I would love to start scaling in to a bigger size position. However, even if you buy in at this point, I think 5-10 years down the road, no matter what, it's going to be higher than this price point. That's just my personal opinion. I'm sure other people have that opinion as well. But also looking at the MACD indicator, it crossed over. It looks like it's starting to head down to the zero range. Is it going to reach it? I'm not too sure. Time will tell. And then that RSI indicator is not really showing us much. And if we look at the two moving averages, we have the 50-day here and the 200. Nice big spread between the two, and they're both kind of facing upwards, which is bullish. So that's always nice to see. Maybe if we do get a break eventually, I would probably start scaling at the 154. That would be really nice if it came down to the 140s. You know, it really just depends on where we see this going. But like I said, long-term hold, you're probably good either way with the GLD. Long-term hold. So you got to be patient with this one because there is going to be volatile days. Okay, let's move to the next. Okay, so now we're at TSN. This is Tyson Foods. First thing I want to point out is the moving averages. We have the 50-day going downwards. We have the 200 kind of sideways, but kind of sloping down. And we have a big spread. That means that we're in overall bearish context. That you got to take note of while I'm doing this, because this somewhat looks like a long position to me, perhaps, or potentially even a short, depends on how you want to look at it. But let's go ahead and draw out the support and resistance channel. We have the $65 range acting as resistance. As you can see, it came up here, got rejected, came up here, got rejected, tried to come up here, got rejected. Now, it's been in this kind of just sideways channel here for quite some time. I would say a few weeks, and it was in here previously before too. Also, you got to note that there's somewhat of a trend line going upwards, so it's kind of an ascending triangle. But let's pay close attention to this channel right now as far as I see it goes. The price action is right by the 50-day moving average. So how would I play this exactly? Well, it's going to take a few more days here to really kind of understand what might be taking place. If it breaks through this area right here, or even the $57 range, we might see more of a move to the downside, potentially right, and see a little bounce here. Or if it goes past the $65 range, we might see it break out to the upside. And I mean, I would say the target there would be, right around the 72.50, and then also you have the 200-day moving average up there. So I would like to see this eventually break out to the upside, and how I would play that was you can accumulate shares in this range down here and have a tight stop loss right below that 57.50. So that's one way you can play it. You can also potentially play it just go long, but wait for the break and wait for a confirmation where it closes above. And then if it does break out on high volume, like say if you see a big break on high volume and it shows a big nice green candle, then you might be seeing a more to the upside where you can have money being taken, some profits taken on those two support levels or those two target areas that we just discussed. So that's all I have for ticker symbol TSN. Let's move to the next. All right, here is ticker symbol APT. This is Alpha Pro Tech. I talked about this on last week from a long perspective, and I'm still somewhat looking at this as, hey, this still is potentially a good opportunity. Now the MACD has crossed over and it looks like it's moving into the bearish territory. Volume kind of looks like it's tapering off, but still it is floating around the 50-day moving average. It looks like the last candle came back to back test it, so it did close below it, which is somewhat bearish, but keep in mind the pattern is still really in its form. If I were to draw it out, it looks like it's still within this, so you can start technically scaling in shares here and just have a really tight stop loss. It's pretty much that simple, and if it does get a short squeeze because the short float on this was pretty high, you can see a big move up. Last time it tested down here by the 50-day moving average, we saw it move from under $10, so basically $8, the low of an $8, all the way up to basically, let's just call it $16. So 100% gain from this move from there to there. So if we do see that kind of move from where it's at to break this channel, that's when we'll see that big momentum to the upside, and you can have targets, right previously to where this was up there, and then you can have, a target up here, and then, if you're really, going for the gusto, you can have it way up here, which would be, I wouldn't be able to wait that long. I would have to take my profits off the table fast. Now, from a short perspective, yeah, you can also go short, and if it breaks through this, you might see it drop down to the lower area, which is down here, right around the $8 range or $9 range would be a good target. But either way you look at it, where it's at right now on this trend line and in this pattern, it's a really good risk versus reward trade still at this moment. But it's just going to take more time to decide where the market wants to move this stock. So let's go ahead and move on to the next one. All right, here we go. Tuesday morning. My mom used to take me to these shops. They're like little retailer shops with just a bunch of stuff all over the shelves. I don't even know what they are. Probably going to go out of business. But I figured I'd show you the technical updates. That sounded mean. I didn't mean it in a mean way, but I just don't understand who shops there anymore. Maybe you do. I don't know. But let's look at the technicals. Wow, wow, wow. A lot of volume and a long way down. Holy moly, that's a 32% drop. So that is creating some real fear in this chart. If we look at the context, it is bearish context, right? You have the 50-day moving average going down. You have the 200-day sloping down. Big spread between the two. So yes, very bearish. However, this is the pattern. If you are patient, you can play this as potentially a double bottom. Yeah, this stock is super cheap, right? Keep your risk, tight per usual. I always say that. But we're at I'd say the 40 cent. If you can wait till it comes back down here, you might be able to catch a little bit of a bump up, a little jump to the upside, make for a good little trade and potentially some good profits. Do not chase this. Do not buy in right now at 49 cents and wait for it to come down to 40. Do not average down, because if it breaks this right here, this 40 cent range, we can head a lot lower. So be patient. I would say how I would do it is I would wait for it to maybe go to 41 to 45 cents, and then I would just want to play the bounce to the upside. That's how I'd do it. Let's go ahead and move on to the next chart. I'm starting to see a lot of charts that kind of look like this. You have somewhat of a channel being formed. Boom, kaboom, right? So these last few weeks, it's been trading sideways in this channel. Came up, got rejected, went down, bounced up, got rejected. And if you notice the top of this channel, it is at a 200-day period moving average, Recently, you just had the kind of cross, the death cross. I don't know what they call it, but where the 50-day cross below the 200-day. The 200 really is acting flat right now, so it's not like it's crazy bearish, but it is overall kind of bearish. This is how I'd play it. Notice this previous last candle that formed. It is a hammer candle, which could indicate a potential bounce. So you could play this as if, I would say, you know, we're looking at $32, maybe just right above that. You can scale into a long position and it might bounce up from that point and come back to retest the 200-day period moving average. 32 to 36, that's a, you know, $4 per share gain. That's a pretty nice move. And then you can have a tight stop loss on it. Okay, because where the price action is placed relative to the chart would allow you to set up for a good risk versus reward trade. So you'd really only be risking, you know, this much to potentially gain this much. That right there to me is a good opportunity. If it does break through the 200-day period moving average, holy moly, that'd be even better, right? As far as where it can drop, I'm just looking as far as a lot of support, now it's support. It was resistance back here. Resistance then becomes support. I would say that this would be another potential bounce point from this range if it drops through this channel. So that's all I have for you on BAM. Ticker symbol BAM. Let's move to the next. All right, this is Microvision, ticker symbol MVIS. Look at all that volume. Holy moly, look at these wicks. Wick City over here. The RSI indicator oversold. Look at the moving averages, bearish context, okay? So this is what I'm thinking here. Based on this previous price action, it looks like the move is slowing down. So I would like to see it come back down, the price, to come back down and back test this area right around 35 cents. So if you're patient with this trade and it comes back to back test, you might see a bounce to the upside. Now this is a really, you know, inexpensive stock, so make sure you manage your risk well with this type of trade. You need to be patient. Do not chase it. Obviously, maybe not obviously. I don't really know who's watching this video, but I would say, me personally, if I wanted to play this, I would wait for it to go to 36 to 37 cents. Have a tight stop loss, and then I would have my target pretty much, I would say, right around the just under 44 cent range. Yeah, basically 44 cents. Yeah, right around there. That would be a good target. So basically, I would be risking a very small amount for a potential big gain. That to me is another good risk versus reward trade. Keep an eye on it. That's MVIS. Let's move along. All right, here's TRN. This came up on my scanner because of a previous little candle that formed. I kind of just liked where the chart was. It's a hammer candle. Overall context of the chart, kind of moving sideways, but we did have this kind of crossover. The 50-day went under the 200-day, but now the price action is above it. So this is kind of what I see. I see resistance at the 200-day period moving average. If you just go ahead and draw a line right across, boom, and you've had this big move to the upside. So what do we got going on other than big volume? Got the MACD going, you know, really bullish, I would say, right there, or about to be going over the zero with some strong momentum. And the hammer candle, I'm thinking we might be seeing a break to the upside past this 200-day period moving average. It looks like it's building momentum. So how would I play this trade? Well, as of now, I would say that I would have a stop loss underneath this previous price action, so about $18. My stop loss would be below 18, and I would like to see, personally, the price come down just a little bit more so I can speculate in this trade, thinking like going long that, hey, we're going to see a break. And the reason why I want to do that is because if it does move up here, so if it pulls back and I buy in here, I can take some profits off the table right here, right before that big resistance. And then if it breaks through, I can then take even more profits. Another way you can play this is wait for the break, for it to close above it, and then buy on the breakout. That'd be with momentum traders. I like speculating. I like to say, hey, if it pulls back more, I get a better discount and I can have a tighter risk versus reward trade. So I would look at this as potentially entering in at just above $18, maybe $18.15, $18.10, something like that, and then having a tight stop loss below 18. So I'm risking like a small dollar amount per share, only like 10, 15 cents, for the potential gain of multiple dollars per share. So that's TRN. Cool little setup. Great risk versus reward trade. Let's move on to the next. All right, so this is ticker symbol TWLO, TWLO. I think that's how you pronounce it. To me, this looks like a very bearish setup. And the reason why I'm just looking at the price action floating around the 200-day period moving average, that is acting as resistance and is sloping somewhat down. You have the 50-day also sloping down. The 50-day is under the 200 period moving average. So that is, bearish context, has a nice spread between the two. So it is a bear river heading down. Then you look at where the price action is, getting rejected by the 200-day period moving average, and the last two candles that formed are inverted hammers, which are also bearish. Okay, so where can this potentially go? Actually, before I say where it can potentially go, look at this, the MACD. It is technically above zero, but it does look like it's losing momentum and kind of heading to cross downwards, crossover. So that's going to be interesting to keep an eye on as well. I would say look at this previous support area right here at the 105 range. This 105 range has been acting as support kind of within these last week or so. So if we can get it to break below this, that would be potentially a pretty large move to the downside because there's not too much going on in no man's land out here. So the way I'd play this is I would not go long whatsoever in this type of a chart, but I might start saying like, hey, I might scale in where this is at the 200-day period moving average and speculate that it's going to be breaking this support, the 105. I would probably have a stop loss just above it. Now, this is a pretty volatile stock. Very volatile, so keep that in mind. It moves a lot within a day. So like, for example, if you just look at the y-axis, look how it says 90 here, and then the next line up, it's 95. So each candle could potentially move $5 per share in a day. So keep that in mind. It's very volatile. So if it's too volatile for you, but you like the setup, the way that you can play this is by reducing the amount of shares you purchase or the amount of risk that you take. Okay, so just have a lower share amount, or I guess puts if you do options. So just have a lower amount going into this type of a trade because of how volatile it is. Or you can play it as when it breaks the 105, you can play the flush to the downside if it does flush. Either way you look at it, good risk versus reward setup. Also, you have the 200-day right here where you can basically have a stop loss up above there, and then you have so let's say if you start scaling in right around this area, but then you have the potential to gain about that much. So yeah, 3-to-1 risk versus reward ratio. I like this setup. If you're not familiar with shorting or buying put contracts, then probably just, ignore this one. But I do personally, this is my type of setup. So that's all I have for you today on the weekly scan. We just went over 10 charts relatively pretty quickly. Let me know your thoughts, comments, concerns, emotional outbreaks in the comment section below. Everybody have a good rest of your weekend. I hope you got something from this. Hasta la vista, baby.